Alright guys, welcome back to the channel. I wanted to fire out another trading video this week because this week's been one of those weeks where there's not been too much on the radar in terms of immediate plays, but definitely after all the bearish moves we've seen this week in the market, there's been some setups that could play out if we just wait a little bit longer for those perfect opportunities. And I want to share with you a video of two setups that I'm looking at, one on the Aussie CAD and one on the Aussie dollar. And there's opportunities depending on what type of trader you are for both trend trade and counter trend trade. But I want to share with you the importance of just waiting and identifying that optimum zone for entry before you get tempted to pull the trigger, because as I always say, patience pays the bills. So I want to share with you those opportunities, and if you're looking at anything on your watch list this week, please share with me in the comments. I always take a look at the comments and look over at the charts and try and see what you guys are looking at and how you're thinking and what you're looking at longer term, shorter term. So please put your ideas in the chat and let's get stuck into it. Essentially, what we're looking at is something that could potentially play out next week. So we were bearish, okay? We were bearish once we violated this low. We put in the new low. We started to look for short opportunities. And the last shorting opportunity we were looking for is right here. Okay, we didn't quite get that pullback into the zone we were looking for, so price just went off without us. So the question is where's price likely to go next and how's it likely to get there? So if I bring on my horizontal line, the first one I'm looking at, the first level in this market that I know is a high probability and powerful level of structure is the 9,500 level. Okay, 9,500 in this market is a respected level. Just looking left, we had two doji signal candles here, two doji candles. It was previous resistance, became support. It was support here, it was support here, it was support here, it was resistance here. Okay, you can go back historically and you can see that this is a major level of structure. So if market's likely to push down to that level, one, how can we get involved? And two, what other indicators are there that could confirm that that is a high probability shorting opportunity, right? So this might not be a trade set up for this week, it might be for next week. But what we can do is start to bring on filters and other tools and indicators that will allow us to identify a high probability zone so we can build a case for entry. All right. Now, the first thing I'm going to do is I'm going to bring on an equal measured move here. And to do that, all I'm going to do is bring on the trend line. Okay, so I'm going to change this for a trend line. And we're going to go from the most recent high to low. And all we're going to do is just clone this. And I know there's a shortcut for this. You just hold the Apple button, command button, and drag it. But I'm just going to clone it just to see what that looks like. And you can see that we're lining up perfectly with that 9,500 level. So far we've got 9,500 flat. And we've got an equal measured move, ABCD pattern as it's known to many of you guys. Great, right? What else can we do? Well, there's two other things we can do with the use of Fibonacci. So those of you who use Fibonacci, we can bring on a trend-based extension. And remember, we're looking for bearish trends, and the extension tool is used for high probability extensions as to where we think price is likely to extend to. Well, if we just bring on our fib extension tool, you're going to see that we've got that 1414, 127 zone down here as well. And what you can also do with a fib extension is use the inversion, which is essentially going from the pullback to the low and back to the pullback. And you're going to see that we've got that 1618 down there as well. So this is a really nice zone. And the more confluence you can get here, of course, the more aggressive you could potentially consider entering. Or you might just wait for this level to be tested. Now you've got this confirmation that that is a decent zone, and then look for a retest. And on the retest, you could use a lower time frame so that you could get a quicker entry signal, like the 15-minute time frame. And then you just use your retest, your rules of engagement into a retest, a valid retest, and whatever you need for that. You might need divergence, you might need oversold conditions, you might just need a 3-bar reversal, or you might need that retest, depending on how you enter. But this is the great thing about the CTS. The combined technical scoring allows you to build a high score, and the higher the confluence, the more aggressive you can enter. So depending on your scoring system will allow you to enter in different ways, and you can have different entry techniques for different scores, which makes it really, really flexible and dynamic whilst protecting your capital, whilst minimizing risk and maximizing opportunity. So it's a great little setup there. This is something I'll be definitely looking for next week, or maybe later, maybe tomorrow. I hate it when the setups play out just before the close on the weekend, because you can't get involved, or I can't. So we'll wait and see. In the meantime, if we do see a little complex pullback here, and you're still looking to short down to that 9,500 on the way down, the way that you can get in aggressively on this is to use a pattern. Okay, so those of you who trade ratio patterns, if you're using TradingView, you've got all these tools here for the ratio patterns, but you can go from X to A to B, which is a 618, which means we're setting up for a Gartley, to C, and then for the D completion of the Gartley pattern, and then you can enter aggressively in the Gartley. And depending on how you manage this, instead of taking conventional Gartley targets, which would be a 382 retracement from A to D, you might just use this instead as an aggressive entry into that longer term move, or the continuation move, retest of the down, retest of the lows, or maybe you just shoot for secondary targets as well, and you split your position and you take target 1s here and target 2s down at the 9,500, where you're going to start looking for a stop and reverse, or looking to get long. So lots of opportunity here on the Aussie CAD for those two nice little setups. One is a bearish setup in favor of the trend. Two is a structure-based setup in favor of a real high probability zone, where you can catch that little in-out move. Again, on the counter trend trade, on the structure-based long, we won't be looking for greedy targets. We're just looking to optimal target positions. So it'll be something like this, inside structure. We want to get taken out before we find any resistance, so we can get on to the next opportunity. So that's it for the Aussie CAD. Any questions on that? The next setup is on the Aussie dollar, and this is a pair that we was looking at, not for a short for a reversal in trend, but a potential structure-based opportunity. If we just draw on the horizontal line here, you can see that we are at this level of structure looking left, where we held that level for a number of days, about a week. After seeing some protection of that level, we then bounced off of that zone, and now we're approaching that zone as well. And the actual low, this actual zone was also previous resistance. And if we draw on the rectangle or zone here to the low of that previous low on the higher time frame, what we're going to see is we're entering that zone right now. So we haven't violated it. There's still a high probability setup for a long opportunity. Of course, we're going to be wary of target taking and things like that, because we're not going to be greedy on this. We've got just this little bit of structure support looking left here, which we don't want to fight beyond. That's not going to be an optimal place for targets going beyond that level. And as it's a structure-based long, we just want to get in and out as quickly as possible. So how can we get involved? Well, looking down on the 60, the first thing I want to draw your attention to is the divergence that we've got as we're putting in this descending channel. We're actually got some nice divergence here on RSI. We're putting in higher lows. All right, now those of you familiar with ascending channel setups, you'll also know that we've got descending channel setups. We've got a descending channel playing out right here as well, with bullish divergence at major structure. This is a recipe for a real high probability setup. Now, depending on your aggression into these setups is going to determine whether you're in already or whether you're looking to just trade the breakout here. Personally, I have to trade the bottom of the channel, and this is a pair that I can trade this setup on. All I need is one more test of this low without breaking and closing below the low of this zone, which would be a violation of the previous higher time frame low. And then if we do that, I can get in next bar market and look to take targets at the start of this channel, which just so happens to be at that previous structure support level. So again, not greedy for targets, just in out. But either way, depending on where we push down to, if we push down to, hopefully I can get an ATR based stop below the lowest low, and that's going to give me about a 2.5 to 1 reward to risk to the upside. So that's what's on the radar. There's a couple of other things, but I'm not going to go into those in too much detail in this video. The head and shoulders neckline being tested on the New Zealand dollar is one of them. Again, bullish divergence. We've got this typical dribbling effect of the New Zealand dollar, which we see all the time in this pair. You can see it here as well. But it does indicate that we're likely to see some deceleration, which we're seeing, and then a rally. If we get a rally, I'm more interested in shorting at the neckline. But I'll go over that with you guys in the live session. All right, so hopefully you enjoyed that. That's what's on the radar for a couple of the pairs on my portfolio here. Don't forget, if you haven't registered already, you can go and get a ticket for the Trader Vault Summit. This is going to be a phenomenal event that takes place on the 23rd of April, 2021. So much knowledge under one roof in one short space of time. It's going to project you forward in your trading journey. No matter what stage you're at, you're going to gain insights and knowledge that are going to be invaluable to you. So you can get the tickets for that below, and I'll see you there on the night. Until next time, take care, have a great rest of your day, and don't forget to hit the like button. Take care.